Gentlemen, welcome back. You're back with MGTOW Money. Today's topic is going to be a slight diversion, and this is due to some requests in the comment section regarding my thoughts on today's markets, etc. I hope to start doing this on a regular basis, as I think it is appropriate. But before we get to today's topic, if you're new to this channel, this of course is MGTOW Money. This is the only MGTOW channel dedicated to how you can make money, how you can invest more wisely, how you can spend more optimally, and maybe retire early. Now, let's move on to today's topic. I'll give you some thoughts on markets, and I'm going to start doing this on a regular basis, and I'm going to be talking about all types of markets, whether it be cryptocurrencies, whether it be stock markets, whether it be the pork belly market, or whatever markets that I find interesting. Furthermore, I think you're going to find in the slides more charts and less quotes. So I think you'll please take note of those charts. Those charts I will be commenting on, so this is very, very important. Before we continue, though, let me be very clear. I need to provide a disclaimer for all of you. Please listen carefully. This is simply my opinion. Everything I'm about to share is my opinion. I am not making any professional recommendations on you purchasing, investing in anything whatsoever. People do lose money when they invest. I can be wrong. I probably am wrong many, many times in some of these discussions. These are purely my opinion. Please be aware of that. If you are uncomfortable, if you're unsure about investing in anything, don't do it. Keep your money in the bank. Keep it in a money market fund. Don't do anything that you're unsure about or unclear about. Let's roll forward. One of the most interesting markets that we've seen, or group of markets, class of markets, stock markets that we've seen over the past 6-7 months, that certainly wasn't supposed to happen according to all the experts, has been emerging markets. I'm talking about markets like Mexico, Korea, Turkey. These markets have done extremely well this year for the past 6-7 months. Yes, the U.S. stock market, which makes up probably about 70 to 80% of world stock market capitalization. The emerging markets have done extremely well. So again, U.S. stock market's up about 9 to 10%. Some of these other markets, these emerging markets, are up 20, 30%. You take a look at the table that I've included here. Let me mention another market that certainly it was going to fall off the face of the earth and they were headed to civil war and bankruptcy, etc., is the Greek market. Again, I'll include a slide on that one. And oh, by the way, I had done a video several videos ago where I mentioned the importance of diversifying into bonds and including bonds as part of a well-diversified portfolio, etc. Oh, take a look at what the bond market has done in Greece. In other words, if you back in late, 2012, 2013, if you were smart enough, if you had the hindsight to be buying Greek bonds today, it's a factual statement, you'd be sitting on a tremendous capital gain besides getting a tremendous interest rate. So here's the bottom line, gentlemen. Emerging markets are something that have performed very, very nicely this year. Are they going to continue to perform relatively well this year? I don't know. I'm not sure. But I will say, and we'll get to this in just a second, they are relatively undervalued. And I'm comparing that to the price to earnings ratio, price to sales ratio, price to book ratio on them. Furthermore, to mention one specifically that's also very interesting, is the Russian market. Yes, the Russian market that you can buy. And by the way, anyone who's listening here can go to a stockbroker and buy just about any of these markets, whether it be the Mexican, the Korean, the Mongolian, the Thai market, etc. You can do so. You don't need to fly to these specific countries. There are funds available, very easily available, just at the click of a mouse that you can purchase, that you can put $100 in, $1,000 in, $1 million in. Very easy, very simple. Real quick, though, again, on the Russian market, the reason why I thought that was interesting, it's down about 20% this year. I attribute a lot of that, in my opinion, due to how oil and gas has been down. But it is a very interesting market because it is one of the most undervalued markets, as measured by the price-earnings ratio, as you can possibly find world over. I don't think Russia is going to fall off the face of the earth tomorrow. I'm not saying they don't have economic issues. However, they also have tremendous natural resources. So anyway, needless to say, do your own research. It's just an interesting thought. Let me get, though, to specifically the U.S. stock market, some comments on that. I know many of you are ultra bears, perma bears. The stock market's going to hell. The U.S. is going to hell. It's all going to zero, etc. We're going to have this tremendous meltdown any time. It's interesting. I just read a newsletter comment from a guy that I've followed for many, many years. He says, no, there's not going to be a meltdown. Instead, it's going to be a melt up. He says, yes, the markets are overvalued by many metrics. Again, going back to the CAPE ratio, you'll see a chart on that, price to book, price to sales, etc. However, that doesn't mean that it couldn't become that much more overvalued. And here's the point, has been said many, many times, the market can stay irrational longer than you can stay solvent. So, in other words, despite what metrics might show today regarding overvaluation, etc., as we're measuring it within the U.S. stock market, that doesn't mean that it couldn't go a lot higher, gentlemen. So just be aware of that. And so keeping some percentage of your overall portfolio allocated to the U.S. stock market is not a bad idea. Again, some percentage. And that percentage, of course, is very unique to you. We'll talk about that at another time. I would further add, though, there are seasonal tendencies to the U.S. stock market. This quasi applies worldwide, but especially to the U.S. stock market, there are certain seasonal tendencies that you should be aware of. Specifically, the market from about May, early May or so to late October, typically, generally speaking, does not perform very well. In particular, the month of September, for whatever reason, is known as a bearish month. It's one of the worst performing months of the entire year. Here's my point. If today, and I'm recording this in mid-July, if I was looking to put money into the market, frankly, I would not be necessarily considering the U.S. stock market today. Although, again, I can't predict the future. I have no idea what's going to happen tomorrow or even next week. Maybe the U.S. stock market's going to double in the next couple of months. I'm going to play the game of probabilities. I'm going to, if I was going to invest additional funds in the U.S. stock market, I think I'm going to be patient. I think, as Warren Buffett would say, I'm going to wait for that fat pitch, or at least something that I think that's a little bit more hittable. I think personally, I would be thinking about waiting till mid to late October, letting things shake out. Let's see how this thing works out with interest rates, to see how the Federal Reserve does in terms of if they're going to continue to crank up interest rates in the U.S. as well as across the world, the ECB, etc. And let's just wait a little bit. It's not going to change much to wait, I don't think, over the next 3 or 4 months. That, of course, is a personal opinion. Let's move on to another market. I know a lot of you are very interested in cryptocurrencies, whether it be Bitcoin, Ethereum, etc. It goes without saying, if you've not been following Ethereum, obviously you're not following much in terms of cryptocurrencies. I've stressed repeatedly, you need to be careful relative to speculating in cryptocurrencies. I, of course, did a video about, blowing up and that type of thing. And I've certainly stressed the importance of don't put all your money into one particular basket or even a high allocation into a particular investment. For some of you that may not have noticed, June 18th of this year, about a month ago, Ethereum was trading at approximately $390. Today, I just checked, I believe it's trading around $170. So in other words, Ethereum has dropped in a month over 50%. Needless to say, I hope you're not one of those people that bought about a month or so ago, because you're probably not be very happy right now, and you're probably not going to be very comfortable right now relative to your investment in it, unless you've made such a small investment, it doesn't make any difference. The point is that if you use leverage and you've put a large allocation of money into it, for most people, they are going to be very uncomfortable. So I hope you'll take something from this, that markets do and can be very, very volatile, regardless of whether it be Ethereum, whether it be the currency markets, whether it be the stock markets, etc. Gentlemen, I'm going to wrap up with a couple of truisms. I rarely make guarantees, but I'm going to give you a couple of guarantees right now. Number one, no one cares more about your money than you. No one cares more about your money than you. Not your mom, not your family, not your stockbroker, not your financial advisor. Nobody cares more about your money than you. So you've got to research this stuff. Number 2, no one, and I can't emphasize this enough, and I've had to drill this into my head, frankly, over the past several years. No one can predict the future with any degree of certainty. I can assure you, I've tried. I've tried to follow every guru that you can possibly imagine and many gurus you've never heard of. Unfortunately, no matter what kind of tremendous track records they show you, that doesn't mean that their next prediction can't be wrong and you could end up really, really losing, which goes to something that I can't stress enough, gentlemen. Spread your assets, diversify your assets, put them in non-correlated asset classes, put them in different things, keep some cash aside so that if there is a tremendous crash, whether it be in the stock market, whether it be in the bond market, whatever type of market, when there's something that's selling very, very cheap, a la buy low, sell high, when you've got some cash aside, when you've got some investable dollars aside, when you've got all your debts cleared, and you've got some money that's just sitting there patiently, and again, you're waiting for that fat pitch that I mentioned, make sure that you've got some dollars just sitting there waiting, that you can step up to the plate and you can potentially make some tremendous money. Gentlemen, I hope you all found that useful. If you did, hit the like button. As always, if you haven't already, hit the subscribe button. We, of course, are building an international MGTOW army of financially independent men. And because we're moving this forward, I need you to share this video with friends. I need you to post it on forums. And as always, I wish you only the most profitable day. John Galt, out.